Small business funding no credit check options. By avibusinesssolutions.com. When cash flow problems hit, you can't always wait for your credit score to improve. If you need to pay employees, buy inventory, or fix equipment, small business funding with no credit check can keep your business running. Fast funding attracts business owners, startups, and self-employed people. No credit check funding means your credit score isn't checked, but there will still be requirements and costs. Lenders look at your sales, business bank activity, invoices, and card payments instead of your credit score. What small business funding with no credit check really means. Most no credit check funding is based on your business's cash flow, not your personal credit score. Some lenders skip credit checks completely, while others may do a soft check or look at public records. They focus on your business deposits, monthly sales, how long you've been operating, and recent sales trends. This is helpful if your credit is weak or just starting to recover. Cash flow-based funding can be a better option than a bank loan if you need money fast. The trade-off is usually higher costs, shorter payback times, and more frequent payments. Don't just ask if you'll get approved. Ask if the funding will solve your problem without making things harder next month. Who this type of funding is best for. No credit check funding is best for businesses with steady sales but limited borrowing choices, like retail shops, restaurants, contractors, online sellers, service companies, truckers, and beauty professionals. It's also helpful for newer businesses without a long credit history. If you have steady deposits, some lenders care more about your recent performance than your credit history. It's not a good fit for businesses with unpredictable sales, low profits, or no plan for how to repay. Fast funding is best for bridging cash flow gaps, handling busy seasons, or paying for urgent repairs. It can make things worse if you use it to cover ongoing losses without a plan. Common types of no credit check business funding. The most common type is a merchant cash advance. It's not a traditional loan. You get money up front and repay it with a portion of your future sales or with daily or weekly payments. It's fast and easier to get if you process lots of card payments, but it usually costs more. Revenue-based financing works in a similar way, but offers more flexibility. You repay based on your total sales, not just card payments. This is good for businesses with steady income from different sources. Invoice factoring or invoice financing is helpful if you're waiting for customers to pay. Lenders look at your invoices, not your credit. If your customers pay on time, this can turn unpaid invoices into quick cash. Short-term working capital loans are another option and don't focus as much on credit. Lenders check your bank statements, sales history, and how long you've been in business. These loans are fast to get, but you may have to repay every day or every week, which can be tough on cash flow. A business line of credit is harder to get without a credit check. Some lenders use your sales data to offer flexible credit lines. If you need money regularly, this can be more efficient than taking out several advances. What lenders usually look at instead of credit. Even without credit checks, lenders need to understand the risk. They'll look at your monthly sales and want to see steady deposits over the last few months. Lenders also review your bank statements to see how you manage cash flow. Too many overdrafts or big swings in your balance can be a problem. Businesses with at least a year of steady sales have more options than brand new companies. In some industries, lenders care about things like the average sale size, how often you get paid, and how much you process. If you have steady card payments, that helps. No credit check just means the lender uses different information to make a decision. The real pros and cons. The biggest benefit of no credit check funding is speed. You can get approved and receive money in just a few hours. This is perfect for urgent needs like payroll, inventory, repairs, or last-minute opportunities. Another benefit is accessibility. Traditional lenders often say no if you have a low credit score, but cash flow-based lenders may still approve you. The downside is that it costs more. Easier approval means higher fees and more frequent payments, which can be tough if your sales drop. The best funding matches your sales cycle and helps you grow. There's also a risk of taking too many advances at once. This can get expensive quickly. If you can only make payments when sales are perfect, the offer might not be right for you. How to evaluate an offer without getting burned. Look at how much you'll repay, not just the amount you receive. If you borrow $25,000 and have to pay back $32,500, make sure the extra cost is worth it. Also, check how often you have to repay. Daily payments might sound easy but can be hard if sales slow down. Weekly or flexible options might work better for you. Ask about fees, setup costs, and whether paying off early will save you money. Sometimes it does, sometimes it doesn't. Match the funding term to your needs. Don't use short-term money for long-term projects. If your project takes 6 months to pay off, a short loan might not be the best fit. How to improve approval odds. To get better offers, organize your records before applying. Clean bank statements, clear proof of sales, and accurate business documents help lenders make faster decisions. Ask for an amount that matches your business size. If you request much more than your typical sales, it can hurt your chances. Asking for an amount based on your average monthly deposits is more likely to get you a good offer. Keep business and personal money separate. A business bank account makes it easier for lenders to see how your business is doing. If you take electronic payments, Steady Sales will help your application. If you want help, a company like AVI Business Solutions can match you with funding options that fit your business needs, instead of trying to squeeze you into a one-size-fits-all loan. When no credit check funding makes sense. No credit check funding makes sense when speed matters, your sales are steady, and you have a clear business goal. Use it for things like buying discounted inventory, covering urgent repairs, handling seasonal cash flow gaps, or paying employees in a pinch. It's not helpful if you don't have a way to repay, no plan for more income, or ongoing losses. Fast funding only works if it puts your business in a better spot. Think of small business funding with no credit check as a tool, not a habit. If it helps you grow, protect your business, and fits your cash flow, it's a good choice. If the numbers don't add up, it's better to wait. The best funding is quick, flexible, and gives your business room to grow. Use it wisely to support growth, not to create more stress.